That's a really strong combination. Low inventories, high demand for all kinds of equipment. Is that going to get you 5? I don't know that. I'm not going to forecast that, but I'm going to say, like the Atlanta Fed, it's a plausible number.
That was National Economic Council Director Larry Kudlow, optimistic about third quarter GDP growth following that robust 4.1% growth that we saw in the second quarter. To Raymond James Chief Investment Strategist Jeff Saut on if this is proof that the economy not only is booming but sustainable. Jeff, nice seeing you.
Pleasure, Charles.
We know these numbers bounce around the guessing game as we go into the next quarter, and we've got a long way to go. The Atlanta Fed a few days ago were at 5%. They're 4.4%. Nothing to sneeze at, but certainly showing the volatility. But is it possible, Jeff, that we could actually see this sort of sustained growth quarter after quarter? Because over the last 10 years, we've had the occasional spike and then we've collapsed.
Yeah, I don't think this is a blip. I know some of the media stations are calling it a blip. A better indicator of the strength of the economy that came out with the GDP report last Friday was real final sales. And it's a better indicator because it excludes net exports and it excludes inventories. And it was up an eye-popping 5.1%. So we think the economy is sustainable. I've said it on this show before. I think the economy is stronger than a garlic milkshake.
Okay. You got to give me a moment to get that one out of my head for a moment. The thing is, I can actually taste it. That's what's bothering me. I also thought, and you can tell me, I looked at that GDP report really closely too, and this $30 billion decline in inventories, that's going to have to be made up too.
Yeah, that's a fact. That actually took 1 full percentage point off the GDP number. So if inventories would have been in line, you would have had a 5.1% print in GDP. So the economy is strong. Everywhere I travel all over the world, and it looks to me like a global synchronized economic recovery.
But the rest of the world is starting to slow vis-a-vis America. So does that concern you? How synchronized does it have to be for us to get to levels that we had sort of thought weren't possible anymore?
Well, I think the U.S. is going to be just fine. The stock market is telling you that the huge military operation by Iran in the Persian Gulf is a non-event, and that it's possible that the trade tariffs won't be as onerous as people expect, and they may not even stay in place for very long.
No, I don't think so. I don't think that would be the case either. Again, of course, we'll see. This is a game that we haven't seen, a battle that we haven't seen before. What about domestically, the Federal Reserve? I think that's always, to me, the dollar, oil inputs, the Federal Reserve, they matter so much more than a temporary trade battle.
Yeah, I absolutely agree with that. And I think the earnings drive that we've got, we're going to have 20+% earnings growth over the next 3 or 4 quarters. People are still scared to death. You've had a huge reduction in the amount of publicly traded companies. I mean, the Wilshire 5000 has like 3,600 stocks in it now. It ought to be called the Wilshire 3600.
But is there something wrong with that? And if so, does that mean also there's something? I mean, are we skewing the markets with the limited amount of stocks out there to buy, the buybacks, and those kind of things?
You know, a lot of people point to the earnings growth and say it's only driven by what the Japanese would call Zytec, which is financial engineering, and by share buybacks. I think it's much more than that. You've seen revenue growth pick up in the past few quarters. You've seen the earnings drive come to the fore, and you see that the individual investor is still scared to death because they didn't manage the risk in 2000 to 2003 or in 07 to 09.
Yeah, you know, I look at the American Association of Individual Investors, and 40% neutral, which is an indifferent reading, and it's shocking. It's absolutely shocking that many people will be indifferent to this kind of a market rally. But the pros say it means we're going higher. Jeff, you're one of the best pros out there. We always appreciate it. Thank you.
You bet.
All right.